Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. A hawkish tilt. The plot thickens for U.S. inflation narrative as the Fed minutes show some officials considering hikes. Stocks rally in Asia with tech shares leading gains as AI fears ease. Conflict concerns, oil steadies after a big rally, the biggest rally since October, following a report that U.S. military intervention in Iran could come sooner than expected. Plus, European earnings in focus. Nestle and Renault hitting the wire just about now as Airbus says the lack of reliable engine supply is holding back its delivery goals. We'll break down the numbers this hour as we get it. Looking at the markets this morning after those top stories, we are looking at the futures here in Europe that should be trading just a hair down here, about 0.1% for the Euro Stoxx 50, looking at 61.10 for the opening trade a little bit later today. The U.S. dollar catching a bid over the last couple of days. Yes, part of the story is the hawkish tilt from the Federal Reserve in the United States, but a much larger part of that story is right over there. Brent crude breaking through 70 for the first time since June, so for the first time since we saw those first strikes from the United States on Iran back in June of last year. Now Brent trading above $70 a barrel. We're watching also in the United States at 1:30 p.m. initial jobless claims. The Fed obviously watching all of this very closely as there's sort of mixed signals in terms of inflation and the job market in the UK here. 3 p.m. We're looking at Euro area consumer confidence, and to say nothing of the big earnings out of the United States a little bit later today. Walmart. All eyes are sort of on the Walmart and the American consumer. Let's get started. Well, good morning. Let's break down some of the earnings that we are getting crossing the wires this morning. Renault, the automaker out of France, operating margin at about 5.5%. That is below the estimate for 2026. They are expecting that to be at about 5.9%. That is coming in well below the sort of estimate, 5.5% in terms of the guidance and the outlook for the French automaker. We were also expecting an operating margin within this year at 6.3%, and I believe that came in basically bang in line. But we'll have a conversation with the CEO of Renault, the new CEO of Renault, we should say, François Provost. That'll be a little bit later with our very own Caroline Conan in about 10 minutes' time. We should say that Renault is the second worst performing automaker within Europe at the moment, down about 37% over the last 12 months. We're also watching very closely what we're getting out of Nestle this morning, the Swiss food giant, reporting numbers this morning, seeing organic growth of about 3 to 4%, accelerating versus 2025. Internal growth at about 0.8% for an estimate of 0.7%. So a slight beat there. Pricing, they're seeing moving up a little bit nicely there, 2.8% with an estimate of 2.6%. We've also had a lot of news out of Nestle over the last couple of weeks. We've also know that there's a new CEO over there, in addition to Renault, some shakeups over at the board level, as well as sort of considering apparently a revamp and reducing their exposure to the ice cream business. So these will all be some of the stories we'll be watching a little bit later throughout the morning, and to see how the markets open and how they digest those earnings reports that we are getting this morning from Renault and Nestle. But before we get to that, let's get to the Federal Reserve. The latest Fed minutes show officials were surprisingly wary of cutting interest rates when they met last month, with some suggesting hikes may be needed if inflation remains high. Let's bring in Ven Ram, Bloomberg Markets Live currency and rate strategist. Ven, what stood out to you from these minutes? Is this sort of idea of the inflation narrative in the United States coming into question?
Morning, Ollie. Yes, absolutely. The Fed Reserve minutes show that, they are, whereas at least some of the members are wary of cutting rates further. And that is not a hard predicament to see, because if you look at the Taylor rule rate, what it is prescribing is at the current levels, policy settings are just about right, meaning the one rate cut that the Fed has predicated for this year will depend on a mellowing of inflation to 2%, core PCE to 2.5%. Mind you, the core PCE reading for that we'll get later this week is forecast to show a reading of 2.9%. So that's uncomfortably high for the Fed to be cutting rates. And given the growth impetus in the US at the moment, there is no room, according to the Taylor rule rate, to cut rates. So which is why the diffidence and the hawkish minutes that we got yesterday.
And thinking about the ECB also, Ven, I mean, obviously there's a big conversation about who is going to replace Christine Lagarde. There was that report out of the Financial Times yesterday saying that she could step down early. The report being that she might step down early in order to give the current sitting government in France an opportunity to put somebody in at the ECB that is less political. So explain to me, Ven, how we can be preventing the politicization of the ECB while politicizing the ECB.
Well, that's a hard one to crack, Ollie, because they are politicizing it by saying that we want to be. But if she indeed steps down before her term runs out in October, and indications are that she will want to step down before the French elections in April, then it stands to reason that they will want to appoint somebody who's more of a centrist candidate as opposed to someone who's Eurosceptic. And to that extent, it already shows political interference in the appointment of one of the most prestigious jobs. But these are early days yet. The speculation will wax and wane in the weeks to come and even in the months to come, because there's plenty of time to go before April next year. And we don't for sure know whether Lagarde is indeed going to step down before her time expires in October. So there's plenty of imponderables here. At the moment, if you look at the markets, Ollie, if you look at the German yields, they were just unchanged yesterday. And if you look at even the French yield spreads, they were very contained. And in fact, they've been rallying in the past few weeks. So at the moment, the markets are saying there's nothing much to price here.
Yeah, and indeed, it's something that we're going to be talking about certainly for the next few months and potentially, more than a year from now. Thanks so much, Ven Ram. And it seems that in the lead in order to potentially replace Christine Lagarde is the Dutch and the Spanish. So we'll see how that develops over the next couple of months. So let's take it from central banks to the commodity story. Oil has steadied following its biggest gains since October after reports of an imminent American military intervention in Iran. The White House warned Iran would be wise to make a deal with President Trump, saying diplomacy is their ideal first option.
There's many reasons and arguments that one could make for a strike against Iran. The president had a very successful operation as commander-in-chief with Operation Midnight Hammer, as you know, as you just said, totally obliterated Iran's nuclear facilities. The president has always been very clear, though, with respect to Iran or any country around the world, diplomacy is always his first option, and Iran would be very wise to make a deal with President Trump.
Well, joining us now to unpack a little bit of that is Bloomberg Horizons anchor Jumana Bertra. Thank you so much, Jumana, for joining us this morning. Given the move in oil that we saw yesterday, we saw Brent break above 70 for the first time since June of last year when we had those strikes. What is the U.S.'s options here for Iran?
Yeah, well, that's exactly it, Ollie. Yesterday morning, we were talking about the quote-unquote progress that was ostensibly made at those discussions in Geneva and pushing forward towards more rounds of negotiations in the future. By the end of the day, we were talking about the real possibility of U.S. military strikes, military action, kinetic action on Iran, which is the reason why you saw that huge spike in the price of oil, up more than 4%. So at this point, it's very clear that the U.S. has two paths. Essentially, continue down the path of diplomacy, continue with those negotiations, or, which is what multiple outlets are reporting, go down the route of military action. Now, at this point, and the president has stressed this many, many times, his preference is to get a deal done. He has said that no president in history has done a, quote, good deal with Iran. Obviously, it's a dig at the JCPOA deal that he pulled out of in 2015. But their focus right now is to continue with those negotiations on terms that suit the U.S. But at the same time, Ollie, we need to be cognizant that there has been a massive buildup of military assets in the region as well. That second aircraft carrier is making its way through the Atlantic. It's going to arrive in the Mediterranean this week. It will be positioned in the Persian Gulf next to the first aircraft carrier. Bunch of warships, submarines, all positioned in the region as well. And so the region is on high alert, as are the troops in the region. There are about 30 to 40,000 troops positioned here. And at the same time, Iran are paying notes of this as well, taking good notes. And if you recall, yesterday, they actually did a military exercise around that Strait of Hormuz, which is the canal whereby 20% of airborne sea oil passes seaborne oil rather, passes through every single day, and so would have an immense implication on these oil markets, hence the reaction that we had yesterday. But at this point in time, it's unclear whether Pentagon or President Trump has indeed made a decision to strike.
Yeah, it seems, Jumana, that we're really sort of taking our cues from the oil market in terms of gauging kind of where we are on this story in order to sort of get an idea of how to measure progress in the situation. If you talk to conventional foreign policy people, you know, the sort of progress between the United States and Iran traditionally would be measured in years. With this huge, you know, armada, as President Trump has called it, off the coast there, it seems they want to sort of measure it in hours and days and weeks. How should we be measuring progress in this discussion, Jumana?
It's a very good question, and I think the timeline is probably a couple of weeks to a month. Also bear in mind that the region has just started the Ramadan month, the holy month of Ramadan. Whether that might influence the calculus on whether to go for a strike is, again, a question that you have to consider. But yesterday, the press secretary, Caroline Leavitt, actually said, I believe the Iranians are expected to come back to us with more details in the next couple of weeks. So the president will continue to watch and see how this plays out. He indeed yesterday said that the conversations could take a couple of weeks to a month. So we should get a better idea in the next couple of weeks what the Iranians come back with and whether they are going to be open to some of the more hardline suggestions coming through from the U.S., particularly as it pertains to nuclear enrichment. There have been a lot of reports suggesting that they would accept for no nuclear enrichment for a limited amount of time, at least until the end of President Trump's term. But then again, that raises questions about what happens later down the track and whether this is something that would be acceptable to the U.S. From the Iranian perspective, they're pushing very hard for sanctions relief and also the possibility of tying in an economic deal as well to the U.S. and perhaps talking about oil and aircraft purchases and making it part of a bigger deal as opposed to just a nuclear-focused deal.
Well, Jumana, thank you so much. We know how much President Trump likes a big deal and has shown some ability to get things sort of unlikely over the line. So we'll be watching very closely. Thanks for the update there, Jumana, in Dubai. So further for our show today, we've got a ton of earnings crossing the wire. We'll be speaking to the CEO of Aegon, the Dutch insurer, as they report earnings a little bit. They've already reported them. We'll be speaking to him a little bit later today. But certainly we will be speaking in a conversation with the new CEO of Renault. That will be coming up next as the car maker reports earnings. We should say that in terms of their margins, in terms of what they're expecting in 2026, coming out a little bit below estimates and what the market was anticipating. That's next. And this is Bloomberg. Well, welcome back to Bloomberg Daybreak Europe. We just have Renault numbers crossing the wires a couple of minutes ago. I think the sort of line that the market will be paying the most attention to is about the operating margin forecast for 2026. The estimate was for about 5.9%. It has come in below that in terms of what the car company is anticipating for the year at 5.5%. And it's probably about now a good time to get to a very timely interview with Caroline Conan, who's just outside of Paris. Caroline?
Yes, Oliver, and I'm very happy to be joined by François Provost, the CEO of Renault Group, for his first ever TV interview as CEO. He has been in the driving seat of Renault for 6 months, so we have these earnings coming out this morning. Yeah. Revenues in 2025 were 57.9 billion euros, net income down 10.9 billion euros, including the Nissan's impact. What exactly are you doing differently as a CEO of Renault Group?
First, I keep the same strategy because it is a good strategy and delivering results. And we change what is needed in this very disruptive environment. And especially we start to move outside Europe. Over the past 5 years, we succeeded our recovery in Europe. Now it's time to push outside Europe.
In terms of guidance, you're saying your group operating income margin will be between 5 and 7% of term, 5.5% for this year, 2026. It's a little bit below analysts' expectations. Are you being cautious?
The most important is that we release today our midterm financial outlook, which is about robustness and resilience. You know, our industry is very cyclical, and especially at Renault, we had very spread performance over the past 20 years. What I want to do during the next 5 years is really to deliver very steady and robust performance in a difficult environment.
It's indeed a very difficult environment. We've seen, for example, your rivals, Stellantis, announcing billions in charges just a few days ago. In this difficult context, how is this impacting Renault? Are you worried about some EV bets that may turn wrong?
No. We continue our two-leg strategy. EV remains a priority. We'll continue to invest in EV in Europe and also outside Europe. And our e-tech hybrid, second best in Europe, will continue to grow and will extend this also outside Europe. Now we continue to bet on EV, but with our two-leg strategy.
One of the reasons, of course, behind the difficulties of the market is the competition from Chinese EV makers. How big is the threat in Europe?
As a matter of fact, China automotive industry is leading our industry, especially in terms of innovation. So it's why at Renault, in our next midterm plan, we intend to catch up Chinese competitors for all what is upstream. And we think that we can do better downstream in terms of brand management, customer care, customer experience, and also nice products.
But still, this Chinese competition is there. You lived in China for 5 years. You've also accelerated the development times for some new models, including the new Twingo, thanks to a Chinese R&D center. There is a multiple partnership with Geely. Are you worried? Is the French state worried about all this involvement of China within Renault?
No, I think we are doing well with Chinese ecosystem, because we learn from Chinese ecosystem and we are capable to engage with the Chinese ecosystem. Our partnership with Geely is really a great example. Started in 2022 in South Korea, now in Brazil. We have also Horse Powertrain, the leading hybrid technology company, which is a very strong asset for Renault, because we can access to each and any technology everywhere in the world at the top level. So I think we are quite innovative to engage on a win-win basis with Chinese ecosystem.
But still, the French state still owns 15%. Isn't it worried about this Chinese push?
I don't think so. I think the most important for Renault is to have a standalone plan. And our next midterm plan will be a standalone plan. In Europe, we have our core businesses and we show our competitiveness. It is why Nissan, Mitsubishi, now Ford Motors request to join our ecosystem. And outside Europe, we are pragmatic, and each time we can grow, partnering with partners. It's Nissan in India, it's Geely in Brazil or South Korea. We do and will continue to do.
You're planning also to reduce the cost of 400 euros per vehicle. We've seen obviously the higher cost of electrification. We talked about the Chinese competition. Do you think the Dacia brand could be at risk?
Dacia is very successful. So a lot of competitors are seeking to do same as Dacia. But I'm very impressed by the strength of the brand. This is really a cool, best value for customer brand. The level of loyalty of the customers are super good. So I'm confident that we can keep offering a better value, especially over time, with our dealers, with customer experience, quality. I'm confident for Dacia. And Dacia is the second brand to retail customers in India, in Europe, sorry.
In terms of AI investment and technology investment, how much room for maneuver do you have for this type of investments, given the context, given the higher cost for electrification and your race to cut costs?
AI is key. Is key. Not only to cut cost. We embedded already AI in all our operations. For instance, in quality, we decreased by 50% the level of incidents thanks to AI. In terms of manufacturing, we have over 1,000 AI-driven control in each plant. So we already embedded AI in all our operations.
Very quickly, before we end this interview, you've been at Renault for more than 2 decades. What, in your opinion, failed in your predecessor strategy?
The strategy is good. I will continue the strategy. Now our future plan is about robustness, sustainable growth. this is what we need to deliver for Renault, and it is what we will deliver as a team.
François Provost, the new CEO of Renault Group, who's also going to present a new strategy on March 10. Of course, we'll have more details about exactly how Renault Group is planning to deliver all these new models over the next few years.
Well, Caroline, thank you very much. Caroline Conan there outside of Paris with the new Renault CEO for his first television interview since taking the job. We should say it seems like he's going to stick to the strategy for that company. That strategy has delivered a minus 37% move over the last 12 months. So we're really looking forward to hearing more from the CEO. Plenty more coming up, and this is Bloomberg. Well, Bloomberg has learned that OpenAI is close to finalizing the first phase of a new funding round that's likely to bring in more than $100 billion. Meanwhile, Microsoft's president has told Bloomberg the partnership with OpenAI is critically important, but they're also working with other partners.
I think it remains a critically important partnership for Microsoft. We bet on each other, but it's not as exclusive as it was, say, a few years ago. OpenAI uses our compute, they train models in our data centers, but they work with other companies as well. We critically rely on OpenAI's frontier models. They are among the best, many days they are the best in the world, but we have a relationship with Anthropic. We use open source models. We're developing our own models. So on both sides, we work with more partners. But I think the partnership between the two of us remains an imperative. It's a huge priority for us at Microsoft.
The question is why? Is it a hedge? Is it a strategic pivot? How would you describe that move looking at alternative partners?
Well, look, if you want to think about the partnership between OpenAI and Microsoft, all you have to do is ask one question. Would any of this generative AI sector even exist if the two of us had not come together? OpenAI created something that no one else even understood was possible when they launched ChatGPT. And OpenAI could never have created that without Microsoft's compute and really frontier data centers on which to train that. We built something special. We'll each do special things on our own. We'll each do special things with other companies. We'll each do, I think, very special things with each other.
Just one final question, because we're running out of time apparently. Copilot, is it losing traction?
I don't think so. It's gaining ground. It's getting better every week. It's getting better every month. I say this as a user, not just of M365 Copilot, but our consumer Copilot, our researcher agent, our other agents. We're seeing usage grow. We will continue to add features and functionality. I personally think it is an important part, not just of Microsoft's past and present. It is a key part of our future. It is a key part of, I think, making everyone more creative, more productive. I certainly find that in my own work each and every day.
Well, that was Microsoft President Brad Smith talking to Bloomberg's Haslinda Amin. We'll have much more on the AI story, obviously, as we go out throughout the morning. It is not abated yet. We saw sort of a big bid over in the NASDAQ yesterday, sort of dissipating some of the AI and tech concerns that we've been seeing over the last couple of weeks. But coming up on this program, we'll be talking to the CEO of Aegon, the Dutch insurer that reported earnings a little bit earlier today, an insurance company and a retirement plan company that tries to bring stability in an increasingly chaotic world. So we'll have that conversation with the CEO. That's next, and this is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. A hawkish tilt. The plot thickens for the U.S. inflation narrative as Fed minutes show officials considering hikes. Stocks rally in Asia with tech shares leading gains as AI fears ease once again for now. And conflict concerns oil steadies after its biggest rally since October following a report that the U.S. military intervention in Iran could come sooner than expected. Plus, Nestle says sales growth may quicken this year for the new CEO working on a reorganization the company around its core divisions. Let's get to the markets this morning, watching ahead of the open here. And Europe futures, as you can see on the Euro Stoxx 50, a little bit of selling this morning, down by about 0.1% this morning. The U.S. dollar actually now coming down after a sort of rally over the last 24 hours, partially linked to some of the hawkish news we were getting out of the Federal Reserve, but largely linked to what we've been seeing in Brent crude, which is still catching a bid today after its biggest move back since on October. Yesterday, we could see Brent breaking through $70 a barrel. That is the first time that has happened since June of last year. What happened in June of last year? It was those American military strikes on Iran, and that is obviously what is elevating the market for oil at the moment. As you can see, Brent breaking through $70 a barrel. Let's get to your front pages this morning across the news ecosystem. The Wall Street Journal leads with that story. The U.S. assembling the greatest amount of air power in the Middle East since the 2003 invasion of Iraq, as President Trump readies to take possible action against Iran. The story of the front page of Les Echos translates roughly to after the predicted failure of the FCAS, the future combat system that is the sort of joint project between the French and the Germans to build a fighter jet, then there's a necessary reset between that relationship for the two countries for defense cooperation. And over to the Financial Times, which says the UK will require tech firms to remove abusive images from the internet within 48 hours or risk having their services blocked. And you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYBGO. We'll get there this morning. Let's get to some of the earnings we've been getting across the morning today. We have the Dutch insurer Aegon has reported operating profit for the second half of the year, beating average analyst estimates. We're very pleased to be joined by the CEO, Lard, Friese, joining us now from the Netherlands. I'd like to just get your sort of top line on what we saw from the last second half of the year in what has been, a certainly hectic and eventful environment for the last 6 months. Thanks very much.
Yes, Oliver, good morning, and thanks for having me on the show. I'm very pleased to report a very strong set of results, closing out, I think, a very strong year for us in 2025. This is an increase in operating profits of 15%, net result up 45% of the year, and our largest business in the U.S. firing on all cylinders commercially, with a 30% increase in life sales year on year. So I would say overall we're very pleased with the results today.
And you see that continuing into the first quarter of the year, and what are your expectations for 2026?
We are seeing commercial momentum that has been building actually in the second half of the year. If you look at the U.S. business, I said it's a 30% increase in life sales year on year. Our large agency network has increased to 96,000 agents visiting mainstream American families and helping them to protect their lives and to save for retirement. And in the second half of the year, the individual life sales were actually up 49%. So planned sales in retirement were strong, 13% for the full year, an increase in assets, planned assets, and also there the written sales, which is a, let's say, a funnel, if you will, a predictor or an early indicator for the coming year, is also looking solid. So we're heading into the new year with confidence.
And we're heading into the new year also with a great deal of uncertainty across the world, whether it's in geopolitical events, whether it's in the markets. Your job in insurance and pensions is to bring certainty to the world and peace of mind. How much harder is that becoming as we go into 2026?
Well, we always aim to be a beacon of reassurance in a very volatile world. And that is something that we have demonstrated throughout the 183-year history of our company. What we do is we aim to sit with our clients, be as close to the clients as possible, help them to protect their lives, to save for their retirement. And through the balance sheet that we always hold at a very strong level and the hedging programs that we have in all scenarios, we aim to ensure that in all scenarios our clients' money is safe.
And also thinking about the sort of macro, one of the conversations that is inevitable for everybody, whether you're a trader, whether you're the CEO of a large company as you are, is the question of AI. Thinking about AI entering into 2026, what are the risks for Aegon? What are the opportunities?
I think AI provides a huge opportunity for our industry and also for us to get closer to our clients, be more efficient, and make our processes more intuitive and more flawless. We have a wide range of initiatives throughout the company. In Brazil, for instance, we have largely automated and using AI tools for the claims management process. In the United States, we're using it for fraud detection, but also for improved processes in our operations, and in many of the other countries as well. So we believe that AI will have, over time, a very profound impact and a great opportunity to get closer to our clients and be more efficient as a company.
And I want to talk a little bit more strategically about the company. You've been reviewing your UK business. Talk to us strategically about why that is and whether or not you have found bids and what the future of that business holds in your mind.
Yes, this needs to be seen in context of an even larger announcement that we have done at our capital markets event in London in December. We've announced there that we will move the company's legal seat, the company's headquarters, to the United States and become a U.S. life insurance and retirement company with international subsidiaries. Now, in that context, we have asked ourselves the question whether the current strategy that we have for our UK business, if there are alternatives to that. And hence we have launched a strategic review, which is in its early stages, and we aim to be able to give an update around the summertime on that.
Can you say whether or not you've attracted some bids for that business?
The review was launched only a couple of weeks ago, so it's early days, and we aim to give an update near the summertime.
Okay, very good. And you say that one of the main focuses for your strategy going forward, obviously, is the United States. That is where you're relocating your headquarters. Will M&A be part of that strategy? What would you look to acquire within the United States when you think strategically about the future of that business in the U.S.?
Yeah, so we believe our business in the U.S. is called Transamerica. Once we are moving our company to the U.S., we will also assume for the holding company a new name, Transamerica. Transamerica is now 70% of our business and is doing very well. It's growing very well, as I just mentioned. As part of growth, we obviously will also look for opportunities, provided that they are there. But M&A is always where discipline meets the opportunity. So good deals are few and far between, but we will definitely evaluate any opportunity that is in front of us, if we find one.
Just a sort of final question. Very good. And a sort of final question here for operating capital. You managed to generate 1.3 billion euros of it ahead of 1.2 target. What drove that?
It was mainly strong results in the second half of the year, a good claims experience, which is, I think, an important component to this. But overall, a better operating results.
Well, thank you very much, Lard Friese, the CEO of Aegon, as the large insurance and pension company gives their earnings out a little bit earlier today. Thank you very much for your time in bringing stability and peace of mind in what is an increasingly complicated and at times chaotic world. Coming up next, Nestlé says real internal growth will accelerate this year and says it's negotiating a sale of its remaining ice cream business. We'll have more on that next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Airbus shares falling more than 1% on TradeGate versus the Paris close yesterday. That is after they have delivered their earnings and their outlook. They say that a lack of reliable engine supplies for its A320 family of jets is holding back production and the aircraft deliveries. The CEO is blaming Pratt & Whitney for the extending the plane maker's struggle to meet those record demands for some of its planes. To bring some light into the conversation, we're joined by Bloomberg's managing editor for aviation, Benedict Camel, who joins us this morning from beautiful Toulouse. Benny, take us through what we got here from Airbus and why the market is reacting so negatively to what we've seen.
So this is the annual forecast that they delivered this year, and really it's in the engines where they have some issues. The engines obviously powering their aircraft, and they're not getting enough of them, and that's as the CEO Guillaume Faury said this morning, we're having significant issues with that, and that has forced them to sort of soften their outlook somewhat. They said they can't produce the A320 family of aircraft at the rate that they would like to. They also gave a forecast for deliveries this year that is a little bit on the soft side, as some people might think. So you're seeing it in the stock that's down ever so slightly in pre-market, and there's a conference for analysts going on right now, and I'm sure people will delve more into that. But overall, if you look at the numbers, they're actually fairly solid, and this is because there is record demand for aircraft at the moment. So in terms of the demand picture, it's there. It's really on the supply side where Airbus is having issue, and where they're sort of beholden to what some of their key suppliers, like the engine makers, are doing, and they're just not delivering fast enough.
All right. Well, Benny, kind of zoom out for us and talk to us a little bit more about the sort of competition within the industry. I know how many sort of sleepless nights Boeing has provoked for you over the last 12 months. How is Airbus positioned going into this year versus Boeing?
Well, the overall picture, as I said, is pretty strong. So you would think that both companies are doing incredibly well. Boeing has made a real comeback in the last year. So they are stable now. They are delivering more aircraft. Their production is sort of back on track. The factories are humming. And really, Airbus needs to look out for that, because they had probably 2 years where really Boeing was on the ropes. And some people would say that Airbus wasn't really able to capitalize on that in the way that maybe they should have. And part of that has to do with what I said previously. They just have trouble making the jets at the speed that they would want to. But overall, if you look into this year, if you look at how customers are rejuvenating their fleets, if you look at the demand picture, everything is really going in the right way. We have mass orders coming out of really every part of the world. India is a booming market. Asia is replenishing its stock. In the US, we should expect some big orders. And particularly on the Boeing side, we have President Trump, who's a real salesman for Boeing. And wherever he goes, there's usually a big Boeing order following in his slipstream. So that is something that Boeing can count on and that Airbus does not have.
Well, thank you very much, Benny. So we'll be speaking to the CEO, don't go anywhere, of Airbus a little bit later, Guillaume Faury, on Bloomberg Brief at 10:45 a.m. I just want to bring you some of the numbers here from Air France KLM. Operating income coming in at 393 million euros. That is slightly above, I should say considerably above the estimate of 306 million. Capacity about up 3% to 5%. CapEx will be about 3 billion euros going into 2026. Trying to find also some of the sort of capacity figures here, looking at 2026 and what the anticipation is going to be from Air France. Free cash flow is going to be at 315. That is up about 28% year on year. Benny, getting through some of these numbers, we'll continue to break them down as we get through them a little bit more. How is Air France position going into 2026?
So markets actually look pretty favorable for the airlines. We've heard from some of the big US carriers over the last couple of weeks. We will hear from Lufthansa in the next couple of weeks. One big thing that is really going for the industry is the front of the plane, so the more expensive seats, premium economy and upwards, so business and first, and that's really where the money is made, and a lot of people are still pushing into that part of the cabin. It's really at the back of the cabin on the sort of more budget-minded travelers where airlines are having issues finding the capacity. So the front of the plane is doing well. That's where a lot of the capex is going to. You mentioned it just there that Air France will continue to invest quite heavily. So we're talking about new aircraft, but also rejuvenating the planes that they have. So putting in new premium seats, putting in new first-class seats, because that's where they see the growth. And that really is unabated There was a phase when people thought this is going to come off and people will run out of their savings at some point and sort of migrate back to the end of the cabin, the back of the cabin. That has not happened. The demand is still there, and it's principally on the leisure side. So people who travel for leisure but want a nicer experience, want a fancier seat, want to access the lounges, that's what's doing well. And it's still doing well on the transatlantic market. That's another thing that people are looking at very closely. Is there some sign of softness between Europe and the US? Are Europeans in particular having second thoughts about traveling to the US at the moment? That is not yet the case. There's still strong demand there. But that's something that we'll have to monitor over the course of the year, whether that will remain as robust as it is right now.
And how do we unpack some of those themes across the airlines and the different airlines within Europe? I'm looking over the last 12 months. Deutsche Lufthansa up almost 40%, Ryanair up 33%, IAG up 30%. Air France doesn't really feature there. How does this break out across the competitive landscape here in Europe?
So if you look at the short-haul part of the market, that's really where a lot of the airlines, the established carriers that you just mentioned, the British Airways, the Lufthansas, the Air Frances, that's where they're struggling more. So that's really where a lot of the demand has migrated to the low-cost area. Ryanair really doing extremely well. One market that you and I are familiar with, which is Germany, that's really a very weak market, continues to be. Costs are too high. The airports are really too expensive. So a lot of airlines are actually sort of going around Germany. They're moving more capacity into Eastern Europe, into Southern Europe, into Scandinavia. But really, where the money is made is on long haul and in the front of the plane. And that is still where the demand is. So as long as that continues, the industry is relatively safe. On the short haul, that's sort of where more, as I said, has migrated to the low-cost carriers. So Ryanair really looking at a strong year. As I said, we'll get Lufthansa in the next couple of weeks. Probably going to get a fairly strong set of numbers if Air France is any guide. And British Airways, importantly, their big route is the transatlantic market. That's where the money is made for them. So we'll look very closely at that, how that market is doing for them.
Well, Benny Camel, Bloomberg's managing editor of aviation, joining us there from Toulouse this morning. Thank you very much for your time. And coming up, we'll also be speaking to the Air France KLM CEO, Ben Smith. That's an exclusive conversation starting at 7:30 London time. So from the aviation sector to the food sector, Nestle says sales growth may quicken this year as a new CEO seeks to reorganize the world's biggest food maker. The company also reported it's in advanced talks to sell its remaining ice cream business and says it will take a financial hit from the ongoing baby formula recall. A lot to unpack there. And joining us now to do that is Jillian Deutsch from Bloomberg, our very own. Some positive numbers out of Nestle, going through some major changes. Guide us through them.
Yeah, so to keep in mind, Chief Executive Philippe Navratil is really trying to prove to investors he's serious about governance, he's serious about transparency, and he's serious about turning this company around. Nestle has really struggled in the past few years, especially compared to its competitors like Unilever or Danone. So good news for investors this morning. Navratil came out and predicted sales growth for the coming year of between 3% and 4% this year. We'll see how the markets react to that. He's also announced a previous reorganization for the company, so he's going to refocus around 4 segments. That's pet care, coffee, nutrition and health, and food and snacking. One also big piece of this is that Nestle confirmed a scoop last night that our colleagues broke. The Nestle is looking to reduce or sell its stake in Froneri, its ice cream joint venture. And that includes brands like Häagen-Dazs, which might be a familiar brand for some listeners. Nestle also announced last night that it's bringing on 2 new board members. This includes Thomas Jordan, who's the former president of the Swiss National Bank, and Fatima Francisco, the top executive at Procter & Gamble. This is really to show that the company is really focused on governance and turning around some of its corporate issues. And this is on top of previous announcements that the company is going to cut 16,000 jobs and move away from its struggling vitamins and water units. So this is a really crucial year for Navratil as it seeks to really reassure investors after some difficult years.
And Nestle is one of a number of companies that have been affected by the ongoing recall around tainted baby formula. What have we learned about that from their numbers? Have they said anything?
It's a very good question and something that investors are really focused on this morning. They didn't come out and say exact financial figures, but I'm sure they'll be the top question when analysts get to ask questions shortly this morning. But just to take a step back, I mean, infant formula recall, this all began in December when Nestle found a contaminated ingredient that it puts into its infant formula from a third-party supplier. This is ballooned into the company's largest ever recall, impacting 60-plus countries. And estimates have been that it might cost the company more than €1 billion in costs. We should also remember it's not just the actual recall costs, it's also the reputational costs. You know, if more parents keep switching to other brands, we need to keep our eyes on that, so we might not see the full financial hit until the end of the year.
Well, to Jillian Deutsch of our very own, thank you very much for that roundup and explaining what there's a lot of moving parts in the Nestle story this morning, so greatly appreciated. We'll have plenty more coming up, and this is Bloomberg. So we talked a lot about the corporate earnings this morning. Let's talk about some of the macro themes we're paying attention to going into the open a little bit later today. The dollar has been in focus ever since yesterday. We saw a really big rally in the dollar. Here what we've got is a chart of the sort of dollar short premium easing. It's been a very popular trade to sell off the dollar in the beginning half of the year. As you can see there with the red lines coming down, that has sort of retraced over the last couple of days and months. And we should say that the dollar really surged yesterday after some of those reports around what could be going on with Iran, also what's going on with the Federal Reserve. But as you can see, actually the dollar now actually selling off a little bit today, so reversing some of that trend that we saw into yesterday. We're also watching oil as we go into the market this morning, and as well we're looking at European stocks as we've got those earnings coming out through the morning. As you can see here, the Euro Stoxx 50, that bottom line there, is hitting yet another record, about 11% up, and you can see that that is largely drawn by what we've been seeing from the defense industry and of course the financial industry. These are the two sort of real outperformers in the European market that we've seen over the last year. The Euro Stoxx 50 and Stoxx 600 really breaking all of those records. And also, we'll be watching a little bit later in the day is U.S. initial jobless claims. Of course, the labor market is in constant sort of attention to the Federal Reserve and the rest of market participants to see basically where the Fed is going. As we heard overnight and over the last couple of days, a lot of debate at the Federal Reserve from those minutes. More debate, I think, than we had anticipated. Potentially a hawkish tilt with really a conversation emerging at the FOMC about potentially raising rates. We'll also be watching Euro area consumer confidence at 3 p.m. And of course, once again in focus, the U.S. consumer, Walmart. We'll be getting that a little bit later in the day. And as a little bit later in the day, and of course, we're watching the U.S. consumer. The investors are, the FOMC is, and of course, we will be on Bloomberg Television. Also today, plenty of earnings interviews coming up. We'll be speaking exclusively to the CEO of Euronext, Air France, Zurich Insurance, having built on some of the conversations we had a little bit earlier with the Renault CEO. And of course, don't miss that conversation with the Airbus CEO speaking to us at 10:45 a.m. London time. Thanks very much. So that is Daybreak Europe. The opening trade is up next. Bring you into the market open.